And that trend, because I've followed that trend. That Occupy Wall Street then became over COVID financializing this new generation, saying you don't need the middlemen involved. That was the rise of crypto in most people's heads as well. But then the whole thing actually flips on its head, where they suddenly became the bad guys at the middle of all of this with the GameStop thing. Um, it's been a fascinating story of where this is going, but that superpower of kind of decentralized um, ownership over what we do in our financial world is not going away. It's only accelerating.
Hey guys, welcome to Everyday Finance. According to Raoul Pal's analysis, the Bitcoin market is headed for a robust, although calibrated rally. When the Meyer multiple is applied, which compares the price of Bitcoin to its 200-day moving average, the data reveals that Bitcoin continues to be closer to being oversold than it is to being overbought. Even at over $121,000, analysts believe that Bitcoin might reach $180,000 before entering overheated territory. Despite the fact that the indicator is now at 1.16, which is a significant distance below the euphoric values of 2.4 or higher that have been seen during previous bull runs. A phase of ice-cold stability at all-time highs, is characterized by Franka Federer, is reflected here, which suggests that calm accumulation rather than insanity is taking place. Notwithstanding this, there is always the possibility of short-term volatility, the possibility of a drop to $114,000 before to the subsequent huge surge.
We are still early. So when does blockchain come into all of this?
It came around 2010 when when we were working on that startup that I was talking to you about. It was called Blink Nation and then Lemon. We had some developers in Argentina, and they were asking us to send some money through Bitcoins. And we're like, what is this? Early 2010. And so we went into this rabbit hole to understand what it was and read as much as we could, that there was not much to read, to be honest, but just spend time understanding it. So when we started Rivet, we decided that I didn't want to start a venture firm because I don't think great investors need to be labeled. I hate being labeled. You're this or you're that, you're early stage, you're late stage, you do one thing, you do the other. Actually, we just are intellectually curious about the world and find opportunities where they have to be. So we were super early as a fund buying Bitcoins into the fund. And the problem was we didn't know where to store them. We had them on our phone. So we should build a custody business. And that was the beginning of Sapo. And all of these things that started to come were the outputs of what it was hard to buy. You needed bridges into the fiat money. So all of these companies that we backed was a lot of the pain of ourselves at Rivet trying to buy and hold Bitcoins.
That's a really intelligent way of going about a thesis, is to solve problems that you've got yourself or that you deeply understand, as opposed to, oh, that company looks interesting, it might make money. It's not based around that at all. It's like, how does this specifically evolve and what do we have to do to make it work?
That's been our thesis all along. We sort of don't follow the trends as much as others. We try to spend time understanding a problem. And every company that we backed, I would say not every, but almost everyone has one of those pain points that we suffer ourselves that we were trying to solve for.
And when you saw blockchain, did you just think immediately this fits into the whole fintech thesis of where this is all going? You saw the whole idea of digital money and smart contracts and all of that as it started developing?
At the beginning, no. Beginning, what I saw was, I remember the only reason why I'm lucky enough to be able to grow out, leave Venezuela and do well is because my parents happened to save a lot of their money in travel checks in the 70s and 80s. And at the beginning, I thought of Bitcoin as travel checks. They had a hash code. They had a serial number. You had them. If you lose them, it was cash, but it was not there. And so it wasn't obvious to me that there was a whole ledger, an open-ended ledger that you could write a lot of more stuff than just the token itself. It took us a few years, I would say, because we were super early investors into Coinbase. They were one of the first ones. The team at Coinbase, the people inside were working. The founder of Litecoin was inside. the team at Coinbase early on. Vitalik had worked on color coins for Bitcoin early on. We've known him from that era. So when he launched Ethereum, it came later as we started to spend time with them. All of these ideas that were just a general ledger system. So I think it was around 2018 or 19 when we actually told our LPs for the first time, we think these worlds are going to converge.
Right.
You're not going to talk about crypto or fintech separately. They're all going to be just infrastructure power in this. And that's when we started to do a lot more in the infrastructure side.
And what did you see in Robinhood in the early days as well? Because you're a famous investor in Robinhood. What was that story? Because that was also very clever to see don't forget, before COVID, the millennial generation hadn't been financialized. They didn't trade stocks. They weren't interested. And suddenly we financialized an entire generation in the period of a year.
It's one of those beautiful stories. At the beginning, when we met Vlad and Beju, they hadn't even launched the app. They were just working, five guys in a small office in Redwood City in Silicon Valley. But what we saw in them was three things that we really, really loved. The first one was they were the customer. It was their age. They were 26, 27. They were 2, 3 years out of college. They had seen Occupy Wall Street movement. They saw their generation feeling that, and they wanted to do something about it. Because they had worked in high frequency trading software, because they were both mathematicians and physics, they understood how to design and reverse engineer the flow of funds again to reverse the revenue streams the way people were doing it. So they had an understanding of the complexity of the infrastructure. And the third thing, they had taste. They had design, and I know we're going to talk about taste and design and the beauty of how difficult it is to design later, but they had it. They really care about every magic moment, and finding that at that age is very rare. So those were the three things that we saw. We had a bet when we looked at it, and they had a waiting list of 100,000 people, even before they launched the app, 6, 7 months before. And I remember saying to them, you're not going to convert more than 2%. And they said, we're going to convert 60%. I'm like, I've never seen it. They were right. They converted 70% of their waiting list into customers when they released the app.
And, that trend, because I've followed that trend, that Occupy Wall Street then became, over COVID, financializing this new generation, saying you don't need the middlemen involved. That was the rise of crypto in most people's heads as well. But then the whole thing actually flips on its head, where they suddenly became the bad guys at the middle of all of this with the GameStop thing. It's been a fascinating story of where this is going, but that superpower of kind of decentralized ownership over what we do in our financial world is not going away. It's only accelerating.
In contrast to the strength of Bitcoin, XRP is under increasing selling pressure as whale investors liquidate over $50 million worth of tokens every single day. This huge distribution has caused the price to drop below $3, and it is currently hanging about $2.80. On-chain data from CryptoQuant and Glassnode reveals that the balances of XRP on exchanges are increasing, which is an indication that there will be more selling in the future. The veteran analyst Peter Brandt has issued a warning about the formation of a descending triangle on the chart of XRP. He believes that a break below $2.75 may potentially lead to a decline toward $2.20, which would be around a 22% decrease. At this point, the range of $2.75 $2.80 marks a critical support zone that bulls need to hold in order to prevent a more aggressive correction.
So what is left to come out of fintech? Because we're still, as you said, early in that journey. We're starting to revolutionize money, savings, but I just feel like it's going to go a lot further. And that's before we'll come into AI and stuff in a minute, but I just want to see where your vision is for where this is going now.
So because of all these investments and bets that we did over the last 12 years, we were known as the fintech guy or the crypto fintech guy, investors at Ribbit. 3 years ago, next month, we went to our investors and we on our investor day every year, 2022, and our first slide was our 10-year anniversary, and the second slide was tombstone that said "Fintech is dead, 2011, 2022." And what we were trying to say is that all the things that were started in the last decade, the ones that are going to win are already out there. And it's going to be really hard to win because the opportunity sets, the macro opportunity sets that were open with the App Store, with the financial crisis, and with unstructured data had been completely normalized. Those windows had been shut down. So what we think is going to happen, our thesis was 3 years ago, was there'll be a handful of companies, 20, 15, 25, 30, that are going to compound. And now that they have a life of their own, they're going to become the biggest companies in the world in financial services. It will be another decade for that to happen. And this is 3 years back. I mean, Coinbase, Robinhood, North Square were part of the S&P 500 back then. And now 3 of them are. And I know there will be a few more. So what's gonna happen with them is that the ones that are founder-led still and building tech, they're gonna go now and take market share from the incumbents. So far, they haven't taken market share. They've taken a little bit here or there, but now they're seriously gonna go and threaten the ecosystem of incumbents. And the regulation is in their favor now. So that's what's gonna happen with them. And trying to repeat that window with mobile apps or trying to repeat that window with a crypto wallet from scratch ain't going to work anymore.
So, I mean, it's a genius idea to say, okay, we used our platform at first to use the power law to find the investments that are going to work, these big companies,
Yes.
and just say, regardless of whether they're public or private, we're just going to just concentrate into these names.
That's correct.
And let that thesis play out.
And let it play out. And it will take a decade to play out. And it doesn't matter if they're public or private, if they're late stage or early, or they have a mode. But we know if they have control of their time, their brand, their people, and their money, we were backing them. And we have been backing them in those cycles.
And as part of Ribbit, you also have a crypto group as well that does straightforward crypto investing, both in VC and liquid markets. Why did you have those two things running alongside each other? Or is it just the thesis that they're merging into the same thing anyway?
I think they're merging. So I was, what I'm about to say is brand new way of explaining it, and we are thinking about it right now. But I will say the crypto economy, I think it's a mistake to talk about crypto anymore separate from normal assets, because we're going to a world where everything is getting tokenized, so it doesn't really matter. What I think has happened in the last year, since the new administration and the new regulation coming around the world, is that you have given a stamp of approval to the layer ones that are building true infrastructure for the world, like Ethereum or Solana, and you talk about Sui and others. And so now I don't think of them as crypto, actually. They're just networks.
That's right.
And now they happen to be priced through a token that's raised 24/7 on chain. But they're just now networks. So now it's much easier to think about them as what's the price of the network? How do you price it? What scale do they need? What volume? What revenue streams? What business modes? So I think we're past. I think Bitcoin is depegging from everything else because they're becoming truly two different categories of assets. And you've seen it in the price action of the last 6 months. They have different price actions, more or less. So I believe that is the best example that this is just, there was a time when you had to have a token-only vehicle because of SEC and regulations and how to think about it. But now it's all the same, because in the next few years, as we tokenize every single stock in the world and it trades 24/7, an Ethereum or a Solana token, it will be the same as buying a Robinhood stock token.
So we think the difference between equity and token just collapses over time. And what is
equity?
Yeah, one of my thesis has been, and I just wanted to bounce this off you, is that I think of meme coins as just a speed test, stress test of instant capital formation. And you can, before you'd have to build a business, go to a bunch of VCs or angel investors, beg them and everything else. And now it's like, if it captures attention, you can coalesce capital in seconds globally through a distributed network. How are you thinking about how disruptive that all is to the VC industry or the investment industry overall?
I think it's super disruptive. I think most VCs don't understand what's coming. Even for us, I'm not 100% clear. We know exactly what it means, but I am shocked on the velocity of capital formation and attention that you can get. It's never been faster. You and I have met people that are doing this full time, and what they're building is insane, and how they get attention. So I will say, we're not there yet because we're not at scale. It's there's not a great the early projects have not been great communicators on what they're doing. They've been a lot more of grabbing attention but not knowing what to do with it. I think we're gonna start to see a generation of founders who are 22, 23 that actually are so crypto native and so AI native that they will take it to a whole new level. So I'm very bullish on what's coming there. Extremely bullish.
Yeah, I think it's going to be super interesting. We could see it again. There was the marker stone of ICOs. We kind of tested it there. It failed a bit, but we got some learnings. Now we're doing it at scale because Solana and stuff is able to, to move at this kind of speed and scale. And out of this, I think will come the final result, whether it's, in 2 years or 3 years, but it's coming. And I think it's incredibly interesting. The other thing about the bet that you have is it's not just about fintech, because the whole smart contract platform is basically the future of the internet itself, whether it's digital ID, all of that. So the bet is kind of twofold. It's the financial system bet, but really there's the whole of Web 2 to Web 3 conversion.
It would appear that the general cryptocurrency landscape is divided between the unwavering optimism of Bitcoin and the unstable emotion of XRP. Bitcoin's technical calm indicates at latent bullish potential, while XRP's dip reflects institutional repositioning and market uncertainty. Traders continue to be cautious but intrigued by the situation. Persistent whale sell-offs pose a threat to overcome favorable catalysts, despite the fact that there is still some hope that an XRP exchange-traded fund ETF would be approved by the middle of October, which might inspire renewed buying activity. A market that is in transition is suggested by the broader tone, shows that the market is quietly gaining momentum beneath the surface and is set for significant surges in both directions.